and welcome. You have tuned into In Your Interest here on News 9 Live. I am Krishna Kumar, and the first big story that we are looking at on this show today is the all-important Zomato Paytm deal. Now that deal has hit headlines as Zomato has moved to acquire Paytm's entertainment ticketing business. Now that business includes movie tickets, tickets for sports and for events, live events as well. And this deal is at a value of over 2,000 crore rupees. So what's the big deal over here? Well, Zomato is now aiming to branch out far beyond food delivery, diving deeper into the quote-unquote going out scene. So on the flip side, Paytm, which has been facing some challenges with all its diversification, wants to get back to its roots, focusing solely on its core business of financial services. Paytm's movie and event tickets will continue to be available on its app during a transition period for the next 12 months, after which users will be redirected to Zomato's upcoming app for the going out segment. It's called District. The market reacted swiftly to the news. Paytm shares shooting up initially by 5%, only to tumble back down and close 3% lower, while Zomato shares also took a small hit, ending the day down about 0.85%, nearly a percent in the red. But the real question here is, who stands to gain more from this deal? And that's what we're breaking down for you in today's special segment. And joining us for that is Mr. Nishchal Maheshwari, market expert. Nishchal, thank you so much for taking time out to be with us over here on In Your Interest on News 9 Live. My simple and straightforward question to you: this deal is good for Paytm. It helps to shore up some cash on its books and at the same time, get back to its core business. For Zomato, with this acquisition, it's well on its way to have competing with the Book My Show.
Yeah, evening, Krishna. I think, as you said, basically it's a win-win for both of them. In case of Paytm, obviously, it's getting cash basically to shore up its balance sheet. Secondly, it's getting out of non-core assets. I think that is one of the issues basically which the market has been punishing it for. So I think this is a very good deal for Paytm. If you look at similarly, basically, I think Zomato, which announced in the last quarter, quarterly results, that they are going to be launching the District app, and which is going to be basically trying to get into dine outs, getting into musicals, events and all that. So I think this is the right step which they have done basically. Yes, the largest one, Book My Show, is still out there, and that's going to give them a lot of competition. But I think it's a step in the right direction.
Okay, let's also make our full disclosures over here. Nishchal, you are an investor in Zomato. So we do want to tell viewers about that straightforward before we go any further with this conversation. But the fact of the matter is that this is a business that is now dominated by BookMyShow.com. BookMyShow and Paytm put together own 90% of this business. Now, Paytm with a much smaller share of that 90%. Now, that comes to Zomato. Zomato has an uphill climb against somebody like Book My Show, and it's backed by Reliance.
So, yes, Krishna, yes, I own Zomato, and that's a full disclosure I want to make basically. Yes, I think Zomato, this is a good start for them. They are looking out. If you look at it in their District app, it's currently also, I think they have the dine out business, which has done very well in the last quarter. They gave a number of around 105% growth at 1,260 crores. So anyway, that a new service with Zomato is starting. It's doing very well. So this is going to be on top of it. And I think Zomato, with its a large customer base, is going to give Book My Show a run for the money.
Right, giving Book My Show a run for their money is one thing, but the Zomato's ambitions when it comes to the app District is quite big. It's not just about competing with Book My Show. It's eventually competing with the likes of MakeMyTrip.com, because there is the other ticketing business, from airline ticketing to because District wants to be a shopping destination, a staycation destination. So Zomato's plans are far beyond just entertainment ticketing business.
Yes, Krishna. So I think in this case, basically, yes, but given that they have bought out what they have bought out today, I was telling in that context. But yes, I think once they start getting into the other parts of the thought process, which is staycation, which is online booking of air tickets and other things, I think they will compete with all of them. And we have to see what kind of strategy they follow, because that's a totally different business. Because when you talk about staycation, you are going to be competing with the likes of hotels and all. So we have to figure out how they're going to actually, are they following the OYO model, where they are going to be the way OYO has developed itself, basically getting a lot of hotels to tie up on its platform. Is that the model basically which they are going to follow? We have to see as it comes along.
Okay. At this stage, the other big question is also is the value at which this deal has been struck over 2,000 crore rupees. You look at the revenues of Book My Show, for example, it has about 976 crore rupees revenues for the last financial year. You look at the other revenues, the number over here is 6.9x the revenues of Paytm's entertainment ticketing business. That's the value at which Zomato has picked it up. Do you think that's a bit much?
Difficult to say, basically, because we do not have much numbers. It's only the top line which is there, but what kind of profitability and all, I don't have the numbers with me, so difficult to say. But I think if you are getting into a sort of a entry strategy, I think this kind of money is fair, is what I would say, basically, because this is more of a strategic investment. It's not just an add-on, but it's actually getting a foothold into the industry. So you have to look at from that context.
Okay, so you don't think this deal is overvalued?
I don't have the details. Yes, on a 6.9 number, basically times the sales looks a bit costlier to me, but I don't know the numbers basically as far as profitability and all is concerned, what kind of potential they have for further growth, because management is not given any guidance on that. So that's why difficult to say on a absolute basis it's a costly deal.
Okay. For Paytm, now that there is no the Paytm bank anymore, what exactly is Paytm now going back to?
So Paytm is actually struggling to get its model right. I think they had got the lending one quite right and become big, but then obviously RBI came heavily down on that. And that's why they had to close that Paytm bank business and the loan business. So I think now they are back onto the advisory thing. The biggest thing remains to be the main Paytm model, which is basically transferring money. That remains to be, but it's not a very profitable business. So Paytm has to figure out basically what model they have to follow. So as of now, we do not, at least personally, I do not like this stock.
Okay, but the stock is up 80% from the low, from its own lows. Talk to us about investors and how the market has viewed this, both stocks tanking after the announcement of this deal.
I think it must have been in case of Zomato. I think there is some concern basically whether they are getting into a third line of business basically and spending money, given that they are right now anyway investing a lot of money in the Blinkit, and they have in the last quarter itself said that they are going to increase the dark stores from around 690 to 2000 by 2026. So that's going to take a bit of investments. So that's why I think the market is a bit worried, and maybe some amount of profit taking is happening, given that the stock is up almost 90% in 1 year. In case of Paytm, I think it's positive basically, but it must have been known, and that's why some profit booking has happened in case of Paytm.
Okay, and how do you see the stocks going forward from here on?
So I've told you earlier, basically, given that I'm an investor in Zomato and I continue to believe that there is a long way for Zomato to grow. If you look at it, Blinkit, basically last quarter itself, they have only guided saying that from 690 stores, they go to 2000 stores and go from tier 2 to tier 3 cities. So I think there's a very, very strong growth case as far as Zomato is concerned. Paytm, I said, basically they have to figure out what model they want to follow. And at the moment, I think it's an avoid.
Okay, there are concerns, if I may, on whether, Zomato is now doing what, say, Paytm did a few years ago, putting its fingers in too many pies.
I do see what we have to understand basically whether it is complementary businesses which Paytm is doing or whether it is going to be totally disparate businesses. So if you really look at it, all the three businesses are actually getting the same customer base. When it is Zomato, Blinkit, the same customer base is going to be get utilized by even district. So that's why I think it's a very complementary business. Yes, it is a slightly different business than what Zomato and Blinkit are. Both are into distribution. In this case, also basically, it's going to be a sort of so they are not getting into the product; they are into the services part of the business. So they will be distributing the tickets, and also they are just creating that platform where you can actually book a staycation, you can book a show, basically you can book a live show.
Right.
So that is kind of the same services which they. So I think it's a sort of a complementary. Yes, you are right that as I was saying earlier that they are investing in Blinkit at the moment and market is a bit worried. Are they opening up too many flanks?
Right. The only question is that is it too much happening at the same time? Because on one hand, you have Zomato taking on Swiggy, Instamart with Blinkit, which is a business that is very difficult to break even and see profits in, which is the quick commerce business. The unit economics of the quick commerce business is still under huge question. But in the meanwhile, it's also simultaneously taking on the likes of Book My Show.
So I don't think so. Blinkit is now fairly well established. If you really look at, they are at 60% market share. And the second player is obviously Swiggy's Instamart, and they are at around 20 or 24%, something like that kind of a market share. So between the two of them, they are still dominating the quick commerce business. Now, in case of quick commerce, also when they had gone out and bought this thing, market was really worried at the time of quick commerce because that's a large acquisition. If I remember it right, I think something like $400 million was spent for him buying the remaining stake. So this kind of so market was really worried, but I think the management has come out right because quick commerce has surprised everybody at the kind of growth. And if you really look at it, we have studied the dark store, individual dark store unit economics. And at a store level, basically, they are making as high as 20% kind of an ROE. We have interviewed quite a few of these store owners, and they are very happy with this business. So I think it's only a matter of time that Blinkit itself is going to become profitable. So not worried about the Blinkit part of it. Yes, I think the new business which they are getting into right now, I think there it is not a emerging category like it was. Quick commerce was an emerging category. Similarly, food delivery was an emerging category. Here there are well-established players. That is one worry basically, that they have to maybe it will take a longer time for them to come out and become profitable.
Okay. We will leave it at that. Nishal Maheshwari, market expert, joining us with this perspective. Nishal, thank you so much for taking time out to be with us here on In Your Interest on
Thanks,
News 9 Live.